is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. As always, we like to come to you at this time. Let's see here. There we go.
The following takes place between 2 p.m. and 3 p.m.
And how, hopefully that did, okay, he liked it, sounded good. So we got it fixed yesterday. I had a Sound Blaster give up the ghost. These little dongles, I'm holding one up right here now, are pretty good because they run on USB and they don't give you noise from the computer back to my soundboard here. But I think I probably have gone through about 4 of these over the last 8 or 9 years that I've done this program. And I always order another one and had a new one sitting back there. But yesterday couldn't figure out what was going on. You always wonder. But it wasn't me. Wasn't updates. It was a dead USB device. So we can play our sounds ad nauseum today. As we start the day here in the markets, where's my thingy? There it is. Got just kind of a little bit of a pullback. As we said last Friday, I was pretty sure we were going to go into a pullback, probably still a little bit more to the downside tomorrow. Of course, tomorrow is the day that option market makers go delta neutral. It's one of the most profitable parts of Wall Street, that and IPOs. So you get kind of a wide berth on what happens for that if you work on the street. The option market makers kind of tell the buy side and sell side guys what to do to some extent. Anyway, we're off 11 points on the S&P cash. And that's at 2968 is the last tick I see here, so we'll keep an eye on it. I'm also trying to keep an eye on this and watch Apple's dog and pony show going on right now. They're trying to show everybody how waterproof the new iPhone is. I don't know if it's any more or less waterproof than it was. I saw something about 2 minutes at 30 meters. That'd be maybe 90 feet, which would actually be pretty good. I just don't know how you're going to drop it to 90 feet and get it in 2 minutes, but pretty good. So what else do we have out here? Looking at gold, a lot of people talking about it. We're kind of not quite on the lows in the GLD. We had some positions. We'll talk about that today. And what else do we have? Oh, we want to look at the volume. It was actually fairly good yesterday as we came off the top. So let's take a good look right now at what we've got. A little bit more volume at this time than we had yesterday, maybe a couple $100 million more on the CBOE consolidated tape. If you're new to my show, I'll send you the link to it if you want. You just have to email me at path@tfnn.com. But yeah, we're at about 5 billion shares as we start the show, which is a pretty good day out here. So we had a little volume off the top. Is it enough? Probably not to really break the back of the market. And for the last 6 months, it's been about 10 billion shares. So we're only doing about half that with 2 hours left to go. So figure we're going to do 7.5 billion, maybe 8 billion shares today. But again, I'm not going to make a lot of decisions until tomorrow night. And the reason is we go delta neutral on options, and a lot of things can happen and a lot of unintended consequences. So for the most part, I try to be as much as I can be in cash for any short-term positions. That goes back to this. In fact, we've got an email here that we'll talk about as we get into some of the other things. Where's my... There, we got to put that up here so we have it. Frank says, many thanks for the options trade in dust and TLT. We made a pile of money on them. Since we're getting out of the dust option and expecting gold to rebound, would this be a good time to consider a call option on the nugget? Well, first of all, there's an assumption in that, and that is that it's going up. Something can go down and just go sideways. I don't make that assumption. And two, I always say at the end of the show, sell when you can, not when you have to. And for options, it's the most important part, because you're not going to be able to wait another 2 weeks or 3 weeks for the thing to come back around to you. You basically have to take your shots. And if you get a good entry, generally when you get an opportunity or a chance to sell and the market moves pretty much toward your target, you should pull the trigger and never look back. Now, I understand that the absolute worst thing a newsletter writer can do is leave money on the table, because that's the most painful a trader can do. The market did everything it was supposed to do and just dole out money, ladle after ladle to you. But the problem is that you get used to that. And for the same people that couldn't see selling at the top, they can't see selling at the bottom. You only make money on options when you clock out of them or you execute them, I guess, in which case you're still deferring when you're going to make money. But the idea behind proper options operations is finding something way out of whack, getting into it when the options premiums are ridiculously low, and then getting out when they're pretty much as much in the money as they're going to get. Generally, the easiest way to tell that is when the premiums dry up to nothing. No one's expecting much or more of a move. But we kind of already looked around it. I was looking for gold to maybe get to 1480. It still might. But it got to 1496 pre-market, and that was good enough for me. I knew that I was going to be selling today with options going delta neutral tomorrow. Anything and everything will happen. There's a lot of reasons for them to push stuff up and down. Certainly can go against you. But I don't see a lot of reasons to be throwing stuff or cash at the market till tomorrow night, and I get a lot more readings about what's going to happen a week from Friday. So far, options have looked fairly good and bullish, even though we've had this little pullback. But we'll get to that after we do history in the next segment. I just want to go back here and see if they're doing anything in Mr. Apple. Of course, I put it in the den a little while ago, and that is Netflix tanked about $6 or $7 real quick. That was on Apple saying that their live streaming service will be $5 a month compared to the $15 a month that Netflix charges. Again, I am wary of everybody from Tesla, the Tesla bull crowd, and the Netflix crowd, who basically discount all competitors as, yeah, they just can't compete. They just can't compete. Well, there's always somebody that's going to come along eventually and compete. But this may be the easiest thing. If you buy a new iPhone, they are just introducing them now. You get 1 whole year of their streaming service free. I'm wondering if that isn't part of it, because guess what? You could just you could just cancel Netflix and watch the Apple stuff for a while. They have some goofy movie.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hopefully I'm back on the air. Not hearing anything. It may be for a variety of reasons, but we'll get to that in a minute. What do we got here? Oh, we want to do a little history, and then we want to move in. Yeah.
And it's all just a little bit of history repeating.
And it's nothing but history repeating. On this day, on 1897, 24-year-old London taxi driver named George Smith becomes the first person ever arrested for drunk driving after slamming his cab into a building. Smith later pleaded guilty and was fined 25 shillings. So, the first drunk driver. Just knew one thing, and that is that at least in my county down here, 90% of the arrests for under the influence were alcohol 10 years ago. They're now 70% drugs. Not alcohol. Pretty interesting shift in who gets pulled over, but it is. Taxi driver indiscretions. And, of course, a great movie, if you like that kind of stuff. Okay. Let's turn this off here. And I'm not hearing anything. We'll see. Hopefully that's it. We talked about exhaustion moves last week. I had a couple of questions about that. We'll bounce around here and get through everything. The principle behind an exhaustion gap is the number of likely buyers has diminished and sellers have aggressively stepped forward in the market, as the buyers may be largely exhausted, implying that the upward trend is likely to stop as sellers take profits from previous extended rise in the stock market. And the exhaustion gap has basically three features: several weeks or month of upward moving, a sizable gap between the lowest price of the day and the previous, so a reversal day, and an above average degree of trading volume taking place on the current day. Not all these things are actually part of it, but let's go back here and look at one of the reasons why I pulled the trigger, and that was, as we called it on the show here, this double repo pattern in the market. And that was, you get 10 to 15 days is kind of the textbook version of it, above a 3x3 or 9-day moving average. And let's go ahead and show it here with a traditional 9-day moving average. It's about the same. You get a close below it. And this is where the 3x3 reacts a little bit faster than the 9-day, and why it becomes so important. We'll go back to the other one here so you can see the difference. But we went ahead and pulled the trigger when this thing actually closed lower on the 4th. We bought the 146 puts in the TLT, and I think I paid $1.30 for them, I think, on average. Out a little bit more than $4 today on those. And again, you got light volume. You got options roll over tomorrow, so we can see a lot of stuff happening. We're also back to a gap that came up on 14 million shares from the 12th of August. So in a counter move, what you want to do is be greedy at the top and fearful at the low, and not because you made a lot of money, it's just going to give you a great deal more money out here. And, you know, that's kind of it. That trade came off not because I'm expecting a big bounce, but because it gave us just about everything we were looking for on the first move. Now, this is a pretty good pattern, but it doesn't end up paying out all in one day. For the double repos. I think this thing can mess around, maybe even get back up to mid 144s and 145, and then have kind of a nice round shoulders. But it certainly looks, at least from yesterday, you had some fairly decent volume. Probably going to test 140 before this thing really has a meaningful move back higher, and the chances are that it could even get back into the 138 level. Now, maybe this goes along for a week or two. Everybody tries to buy it back up, and you get yet another bearish signal, and you go after it again. But you don't want to be the last, especially in options. You don't want to be the last person at the party. And all I can always hear is that diehard, "Welcome to the party, pal." Always like that line. So anyway, you got the TLT, and that was one of our trades, so we made some good money on that one. The other one was options on, why am I having a dust? DUST. We had a fairly good entry into this. We bought the 650 calls on this at I think I got my average ended up being about 28 cents on them. Out at most people probably got $1.20 or $1.30 on them today. So yeah, 300% markup in those in a handful of days. Now you're up here with a lot of volume yesterday on 32 million shares, maybe 33 million shares, back into a high with 16 million shares. But that's not uncommon. You see a lot of volume like that. We talked about the exhaustion move before, and this can be the opposite side of that exhaustion move. When you get 3 straight days of upward movement, it's not uncommon for the market to take a breath, and a lot of times to consolidate out. And of course, the pure evil of option tradings is a stock going nowhere, because it doesn't give you a signal to sell and get out, and of course it doesn't give you what you want, which is more money. And options just continue, at least in the premium, continue to bleed. But both really good options positions cashed out today on, and I always like it when everybody believes that there's zero chance that something in a bull market can pull back, whether it's the TLT going higher or the gold. Both of these had kind of similar patterns. The TLT was much cleaner than the gold. But again, as I said, when we got back from the 3-day weekend, I heard so many people screaming about how they were making money in gold. The first thing I wanted to do is go short it. When everybody's yelling, the old saying is, sell them while they're yelling and buy them while they're crying. And of course, today, a lot of people asking if I should short gold that weren't subscribers, and that makes me always think that that's a good time to cover. So people didn't short it at the top. They want to short it now or short it in a couple of days ago. We had somebody wanting to short the TLT yesterday. Any of those kind of things always, when I start hearing the masses coming to the party, if I'm early to it, I want to be out, maybe the first person out the door. Now, that it varies if you are trading the actual equities. But in trading the in options, it's like trading a hot potato. You want to just you want to get the thing out when you're making some big money. And we had two that were very good today. You can give me a call at 877-927-6648. I can just barely hear something. No? Do I? No, still not hearing anything from the office. We'll be back in a minute.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're back. Okay, so what do we have going on here? Let's check back into the market. Then we're going to get into charts for a while today. We're off 12 points, keeping a close eye on the volume, and 5.3 billion. So the volume is moving rather well today. Dollar index is up about 10 cents, still in that trading range from about 98 to 99. Seems like it is calming down a bit. What else did we have out here? Okay, let's go back here. So you got 2 new phones from Apple. Let's take a quick look and see if there's anything going on at that. Gold's hanging right at 1,500 at the moment, but we shall see. Okay. So, let's see. Well, not a lot of movement here for today, but not unexpected. If it's not over yet, they always wait till the new thing. They were blowing a great deal about some of the new features. The new phone's got a ultra-wide lens, which is one thing, a little better water protection, which is interesting. But iPhone 11, I don't know. We'll have to see whether it's got 5G and any other new features. I always feel like I got to take a shower after one of their dog and ponies because it just seems so cultish, the way that they present everything. They're not that different than other companies in Silicon Valley about showing their stuff and blowing about it, being blowhards about it. Where everybody else is maybe a 9 or a 10, they certainly go full Spinal Tap to 11 on what they have. Maybe it's the whole phony sincerity thing. I can spot it instantly, and everybody can't be that excited all the time. Maybe that's it. I'm fairly immune to those folks on the marketing side of the business. Anyway, of course, the big news out there was that they were going and squawking about Netflix and their $5 answer to what Netflix has for $15. They showed portions of their new film, and I don't know the guy's name or how to pronounce it, but he was in the Aquaman thing. And apparently everybody's lost their sight for some unknown reason, and there's some babies that can actually see. And this is the movie that they're gonna they're gonna plant their flag on to start it. But unsure about how many other things are going to be out there. But for $5, probably not a bad thing, especially if you're maybe disenchanted with the fare from Netflix as of late. I always watch every month what they've got new coming on, and I just don't see anything that's worth me going back to them. Amazon seems to have a lot of the stuff I want to watch. But, of course, it's old reruns. Like I'm watching Wings lately and some other stuff. But I don't know. There's just not that much that I want to see. Anyway, Netflix back down, and it's got some decent volume, about 8 million shares, back into a 9 million share low, not that far. We talked about whether you would want to buy this if you were. And it's on T-Mobile. Won't be so lucky. That about 225 looks like that's exactly where Netflix will find support. So we'll look at that. Let's go to some of the other stocks. In fact, I want to try to get as many of these out of the way because there's a lot out here. Seeing pretty strong resistance in analog devices, ADI. This goes back to the candle of the 13th of August. It was up on 3 million shares. It's just gone sideways here. Hasn't backed down. Fairly light volume today. But that looks like that is setting up a move. We'll watch it over the next few days. AeroCap Holdings, AER, going from a 1.3 million share July 31st high. Today spiked it with 800,000 and pulling back. Agen, A-G-E-N, Agenus, I think this is a pharmaceutical company, testing its $3.10, 4.5 million share June 25th high a couple of days ago with 1.6 million shares. Today, just 650, so not much going on there. Air Lease Corporation, this one is breaking out. Looks like it won't have the volume, though. Needs a million shares, got 650,000 shares so far. 43.84 was the high for today. AutoNation. Man, this thing is headed up and away, up and away in my beautiful balloon. up to this June 22nd high, 51.99, and again, probably a sign of declining new car sales. When used cars start appreciating, always kind of a good thing for these car makers that are car sellers that actually make more money on used cars, far more money than they make on new cars. Arconic, ARNC, getting very close to this huge gap down that started on February 2nd. That came down with 7.6 million shares. You got 1.2 million shares today. Can it get to 27? It might, but that's where you want to look at it as possible short again. If you're long, that's where you want to ring the register. Booz Allen, the people that brought you WikiLeaks and the rest, and Mr. Snowden, down on some massive volume. And I think this has something to do, but I haven't, let's look at the headlines. I've been looking at some of these leaks out of the last day, so maybe that's okay. Ports, no, nothing in that. Yeah, maybe there's something else. Seen these leaks out of the Intel community the last couple of days. I'm not exactly sure if that's it. Maybe we'll get a chance to check that. But 2 hard days down. Expect 1 more out there. They love to come in 3s. BioMarin, biotech's in a real funk. Nazi Pelosi talking about going after all these biotech companies again, have made it problematic to be in that sector. But you did get a little bounce out of here out of oversold condition going into the candle of August 16th, 1.9 million shares on the way up. Today, not too bad, 800,000. So maybe eventually, let's take a look at the IBB. Okay. IBB, yeah, you still had more volume back on September 4th, so you want to get that retested at the $100 level and $99 level. It never actually even pierced the May 31st low, so you may need 1 more. Like I said, a lot of political intrigue surrounding all the biotechs, putting kind of a wet blanket on them all. Let's see how many. I'm not going to be able to get to half of the ones that I could show today that are interesting. BWX Technology, BWXT, and well, you broke it, but you really didn't have a sign of strength, do you? Looks like it could pull right back into the trading zone, and that would be it. So I'm going to listen for the audio here for the outro. Just barely hear it. Man, it's tiny. Almost nothing. Okay. Well, it's there. We'll be back in a minute.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get the competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
And what do we have? A question below coming in. We also have an email here. Many thanks. Okay. Thoughts on Microsoft? Because it'd be the canary in the coal mine. On Friday, I talked with Tom O'Brien, and we brought up all these, Google and Facebook and the rest of these guys being in the same sector with Microsoft. If you sell two of those, you're probably going to hit the indexes. You're probably going to sell Microsoft too. So if you're actually sitting on Microsoft, probably not thinking too much about how well Microsoft's doing, but maybe a lot more about how the rest of these companies are going to do. We didn't actually get into it because I talked about it on Friday. I figure it's kind of old news. You guys already knew about it. Not a lot of instant reaction, but that's not uncommon. If you read Reminiscence of a Stock Operator, one of the things that Jesse Livermore would do is he'd be stuck in wheat or corn or something else. And if he was stuck in a position, he would buy, if it was wheat, maybe he'd buy corn or something else or sell corn or do whatever he could to get himself, because they thought if corn was moving, then wheat would be. I'm trying to remember that. I think he was nine sheets to the wind into wheat and on the wrong side of it. Maybe it was corn or something. Now, this is like back in the 20s. And it almost ruined him. Of course, the only way he got out of it was selling another one. And then everybody thought that somebody knew something and let him out of his position he was way on the wrong side of. But a lot of times, Microsoft may be the thing to sell, because guess what? If you start selling Google now, you may cause a stampede. If you start selling Facebook now, there may be a stampede. The thing to do is always sell the weak sister, and the thing that Wall Street and many traders always do is sell the thing that's doing well. So not uncommon. Canary in the coal mine, not so much. The other companies have far more exposure in the coming years than Microsoft. But how many times have I seen people in the depths of a market going south selling gold when they probably should be buying it, like we just saw here in the last couple of weeks? Anything can get overbought. Anything can be sold because it's the easiest thing to sell, and it may be the strongest thing out there. I don't think it's particularly an issue of earnings or anything else other than the fact that probably everybody's now looking over their shoulders. You got, what was it, I thought Friday the news was there were 30 attorney generals, and now I think all 50 went in on Google, and you've got 25 on Facebook, and that's growing. And that's the one for Google is out of Texas, the attorney general there. The one out of Facebook's the one in New York City. And these guys have a multitude of sins. If you start digging into these guys with a grand jury, you're going to turn up some stuff. You turn up rocks, there's going to be some worms underneath. And these guys have already done a multitude of things. They've already paid Facebook $5 billion for a fine, and they continue to go on doing what they do. Even Apple got their hands caught in the cookie jar last week on Siri security. So it's not anything new. So that answers that. Again, I'm going to know a great deal more. And today's when I'm really looking at stocks. But I'm going to know a great deal more tomorrow night after options, because we're going to really get into what option market makers think is going to happen this fall. And they're going to be rolling over options and putting new stuff on. So I'm going to know a great deal more. That's why I'm looking at all these stocks. So as I look at and see what I see in the options tomorrow night, I know which ones are likely candidates to either go long or short, maybe even buy options, although I think that ship's sailed. I think it's probably time to go back trading equities. There was a very short period where people were euphoric in both gold and in the TLT and other bonds, and we got our correction, so we'll see what happens from now on. Do tools help you profit from abrupt drop in any of the others' name? TDT, Workday, Shop, Adobe, Intuit, Avalar, Roku, Cyber, PD. No, I didn't go in those. The big one I had over the last year was shorting Tesla at 340 and covering it, whatever it was, 220, 230, 235. That was the big one. The problem with a lot of these is they may, they're going to bounce, but they don't give you a clear signal. The clear signal in TLT made all the difference for me to go not all in, but for me to really look at it harder and see. If you don't get, it doesn't matter how overbought it is, it can get more or more overbought. I need at least some kind of technical signal to set the hook. I know a lot of those companies are ready and have had big pullbacks. I just never saw a really good signal that told me to do that. Some of the other signals I look for is a drop of 50% in short interest over a number of months, and see, like Tesla, it dropped from like 42% down to about 22% short interest when it was back up at 340 at the beginning of the year. And that's the other thing out there. I also had a fairly decent understanding that it bounced on extremely dubious news. I figured the last of the shorts were giving up at that 340, and that's where we started shorting it all the way down. I think we shorted at 340 or I think I was 345 that day, and then 320 and 318, and then I think the last short came in at 299. But again, both the gold miners and TLT were giving simultaneously good signals. And the other thing was that the options were priced at basically a 0% chance that the market was going to turn. They couldn't be any cheaper if they gave them away, per se, especially in historical percentages. And that's another thing that makes me act, which is I can put down, in the case of the TLT, for $148 stock, I can get back a great deal of money for what I put in at $1.30 and get out $4. If I'm trading just a equity and it may move $4, I wouldn't even care. So, what is that? 3%, 4%? But if you can make 200 or 300%, then that's it. So let's not confuse options availability also at those highs. A lot of times, in fact, the reason I went with Tesla and shorted the equity was the options were actually telling us that there was basically a 100% chance it was going lower earlier in the year. So looking at options can give you a window into the soul of what the option market makers think and what the public at large does. Hopefully we should be hearing a little bit of audio now. Just tiny amount. We'll be back in a minute.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're back into this last little segment, and we'll try to get through the rest of it. As we were talking, okay, so we answered that question. We'll be able to go through a lot more of these charts tomorrow. I've hardly gotten fairly far through. Celestica, CLS, challenging a 950,000 share high. That's June 29th. CLS is the symbol, up today with 143,000. So that kind of tells you some of these stocks that may be looking at turning around. CNX Resources, this one tested a 13.6 million share high in July 31st. That was $8.73 with 13.5 million shares. Today, 3.5 million shares. And again, you see one of these stocks and it's probably no big deal, but then you start seeing other stocks in that same sector. You start putting together a theory on maybe a sector or the entire market, and you start to build. And then I start seeing tomorrow night, I'll look at the options. And from our buy of the SPYs on the last day of options expiration, a lot of these things take, it's not, they just fall in your lap. A lot of that is following, as Steve Jobs said, connecting the dots backwards. You got to know everything up front to see the opportunity in front of you. And even though I may not be doing anything the next day, I suspect a lot of the work at looking at these charts today is setting up a trade in the near future. But again, I need some kind of edge in the market. Options expiration delta neutral day, which will be tomorrow, is one of those days. You can get some wide swings as they put options on and options off to limit the exposure they're going to have a week from this next Friday. And I think that's about it for the day. Watch the volume. It looks fairly good. Watch the close today. But really pay attention the next 24 hours of trading, because that's what's going to be the important thing for the next week. In the meantime, sell when you can, not when you have to. We'll see you here tomorrow. Same bat channel, same bat time.